Okay, now we're going to look at Schedule C, her catering business information. So we're going to go here. We could have been on personal, dependents, whatever. We're going to go to income, and we're going to look for Schedule C, your own business. So we're going to go to that. I've already started to put the information in, so we're going to say Moira's Catering. Okay, fill out the information as you go here. It's on the cash basis. Yes, she materially participated. There is no K-1099 miscellaneous, but there are gross receipts, which if we keep hitting next, we get to the receipts and sales income that they give us, which is $77,100. Proceeds of a bank loan are not income. They're just proceeds of a bank loan. There's no returns allowance, no other business income. Okay, so we get to the business expenses after that. And in D, 2.3D, there's a list of business expenses on page 1-4. There is no office and home. Okay, so we're going to click Finished again. Now we're going to add the vehicle that's used in the business. Vehicle, let's say it's the delivery van. Okay, and the date placed in service would be 5/26/2009. And the number of months since they bought it in May, let's say it was used 7 months of this year. It's not a hybrid, and it's not a vehicle for hire like a taxi or a bus. We own the vehicle. Check any that apply. It wasn't used for personal business before 2009. It's not located outside the United States. We didn't stop using it in 2009. We don't own more than 5 vehicles. 5 vehicles or more. Tell us about the 2,000 miles for the delivery van. So we said in the book it says it travels 29,400 miles, all for business, because we don't use this van at all for personal. Okay, so now we're going to report the expenses for the delivery van. Let's say actual expenses. Okay, here. And if you scroll down, you'll see other expenses. Now, they don't give us a breakdown in the book, but they do tell us, indeed, that our delivery van expenses are $5,800. So let's put it under other expenses, since we don't have a breakout of what it is. Let's assume that it's correct. Vehicle depreciation. Alright, now we can do the depreciation right here. Let's go next. Did you pay for this vehicle in part by trading in another vehicle? I don't think so. So we'll say no, it did not. What's our basis? Basis meaning, in this case, the cost, because we didn't trade a vehicle, so it's $10,800. And let's just say it's a light truck or van, 6,000 pounds or less. Either one of these would be correct. We're not sure. Is this a non-personal use vehicle? And the answer is yes. It tells us that she had written documentation that says that no one was allowed to use these business assets for personal use. Is it a new delivery van? No, it's the definition. It says used delivery van. So let's say no, it's not new. Was this vehicle disaster assistance property? And I don't think so. No. Section 179, and again, that is the expensing allowance, and Maura wishes to use that method to maximize her deductions for this year, as it says in G on page 1-5. So we're going to say yes, it does qualify, and that would be our qualifying amount. And we can answer these questions. What vehicle available for personal use? Let's look at the G. Prohibiting personal use of the vehicles. I guess it's available. We don't know, but we can check yes, that it was used by the owner. I think she does have another. She'd have to have another vehicle for personal use. We have evidence, and it is written. Okay, so there's our actual expense deduction, and now we've added the vehicle. When we're done that, we can finish that. Then we get to other depreciable assets, okay, and we're going to edit. We started entering these already. Catering equipment, date placed in service, next. The property basis, again, it's 6,700 as on 1-5. F. Is this listed property? No. And if you need help on the listed property assistance, is it used for entertainment, recreation, or amusement? No. So it's not listed property. Okay. Is it available for Section 179? Yes. There's our 179 deduction, 6,700 qualifies. And we would go to the next piece of equipment. Now there's one thing. There is another asset here that they talk about. Moira acquired a former restaurant building that she uses in her business. It doesn't really say it in F, but it gives you the information in H. So don't forget to add that. Let's add the property. And I will give you a hint here that you just need to add the depreciable part of the business. The depreciable cost of the business is going to be the cost less the amount of land. Remember, we don't depreciate land. So don't forget to do that. I'll leave that as a little mystery for you to input. But don't forget about the building. And that's the tips for the Schedule C, especially depreciation. And good luck with that.